Hi, welcome. Welcome to the City Agents YouTube channel. My name is Ko Fujimoto. I'm going to talk about three choices when permanently returning to your home country. Pros and cons. US tax tips. Three choices are: you obtain US citizenship before you go back, or you go back to your home country as a green card holder and give up your green card later, or somehow you maintain your US green card. What would be pros and cons from the US tax perspective? Let's get started. So the first choice is, okay, I am going to become a US citizen first, then go back to my home country as a US citizen. I understand some countries may allow you to have a dual citizenships. Okay, but let's stick to the tax impact if you have the US citizenship. Number one, very basic. If you're a US citizen, you must file Form 1040 on the worldwide income, and also you need to report specific foreign information, different items such as foreign bank accounts reporting FBARs, or gifts or inheritance received in a year over $100,000 from a foreign person. If you own generally 10% or more of a foreign corporation, and if you receive some income from foreign trust, I think that is also subject to the IRS International Information Reporting. I say that this is a significant burden to you because you go back to your home country, you must deal with the home country's tax system, and at the same time you must be concerned about making sure you file 1040, making sure you report correctly on 1040. On top of that, making sure you report required foreign information back to the IRS. I think this is a major disadvantage. As you get older, I don't think many people will like it. So I put this as a yellow, which means in this slide it's a disadvantage to you. Now, there is a good thing too. There is a good thing. So I used the slightly bluish white color to explain. If you're a US citizen, you can take advantage of this lifetime estate and the gift exemption. This is a lifetime accumulation. It's called Unified Credit. 2023, the amount is $12.92 million. It's a sizable amount. Although the current law dictates that it's going to sunset, or it's going to become a half in 2020, I think 25 or 26, it's still a large number. Majority of US citizens are not paying gift or estate taxes. And if you are a US citizen, you can use this exemption. However, if you are lucky enough to accumulate your assets well over this $12.92 million, let's say $100 million or $200 million, I was able to build up my asset. Well, if you're a U.S. citizen, or you use up this exemption, and then you pass away, let's say in a foreign country, the U.S. government will tax you the excess, right? Excess over this lifetime credit or lifetime exemption at whopping 40% taxes. It's not exactly 40%, but just for the purpose of discussion, I use the percentage as a tax rate as a 40, which is compared to income tax, it's very high number. The small part of the benefit that you are a U.S. citizen is in the marital relationship. Marital relationship. The assets transfer between spouses. If the recipient, if the person who received the asset is a U.S. citizen, then there is a rule called unlimited marital deduction. U.S. government will not tax the giver or donor or the person who passes away. So that's another benefit of becoming a U.S. citizen from a tax perspective. Okay, let's move to the second choice, giving up the green card. Giving up a green card may be disadvantageous to you because there is a potential exit tax. There are three different criteria for you to become a person who may be paying the exit tax to the IRS. I'm not going to explain the criteria today. One of the most well-known criteria is when you give up your green card. Giving up green card means, send back the original green card with a form called I-407 back to USCIS. If your net asset exceeds $2 million on the day when you abandon your green card, then you become specific. The individual are called covered expatriates. The good news is that not all the covered expatriates pay exit tax. Only a certain number of covered expatriates pays the exit tax. Exit tax on investment. To be a little more precise, unrealized gain on your investment over certain exemption, which is actually very high number. I think over $800,000 in 2023. If you have a IRA, you get taxed in the year when you abandon your green card. And if you have a 401k or private pension, you may get taxed in the same year, or you have a choice of delaying getting taxed when you receive distribution from those plans. The last point, as a cautionary note to a potential covered expatriate, there is a rule that the U.S. government already made it a law. If a covered expatriate gives gift or gives inheritance or so-called bequest, inheritance or gift back to the U.S. person who lives in U.S., then there'll be taxes. However, the IRS has not prepared the tax form to tax this. So that means it's not being taxed at this point. The law is there. However, the actual execution of the law has not happened. Okay. So that's the discussion about the covered expatriate. The final year, when you give up your green card, you prepare tax returns. Specifically, most of the people will prepare 1040 NR-dual status returns and Form 8854, unique form that tells the IRS what your net worth is, your past average income tax liability amount, or you need to declare you have complied with federal tax regulations for the last 5 years and so forth. So it is a complicated, it's different. It's a different regular, joint married filing joint tax return that you've been fighting for many, many years. It's a different tax return. It's complicated and it takes time. However, once you're done with this, number 2, and then you do not become a covered expatriate, good for you. You do not have any more 1040 filing requirements or foreign information reporting obligation to the IRS. So you are done. You are done. I want to add one point. Don't forget to send in the form called W-8BEN to U.S. financial institution that hold your bank account, pension account, 401k account, IRA account, and so forth. It's a form that financial institution recognize that you are no longer a U.S. person from a tax perspective, and they should honor the reduced or zero out withholding tax rate, so that you get a, sometimes 100% of the distribution, or interest or dividend, and no U.S. tax consequences. Of course, it depends on the different tax treaties, and also I understand there are many countries that do not have tax treaties with United States. In that case, I think statutory 30% withholding should happen. If that 30% happens, you can either take a foreign tax credit in your home country, or you can file 1040 NR to see if you can get the money back. I think it depends. All right. Now, once you give up your green card, you are no longer a U.S. person 100% for income tax and gift and estate taxes from a U.S. tax perspective, assuming you live in foreign country, on a permanent basis. If that happens, then no inheritance or gift tax on worldwide asset. If I speak a little bit more precisely, no inheritance or gift tax on non-U.S. situs assets. Only assets situated in the U.S. would be subject to gift and inheritance tax or estate tax of the United States. So, income tax, bye-bye, the IRS. Inheritance gift tax, also goodbye, IRS. As long as the gift and estate tax are concerned, non-U.S. situs, U.S. situated assets. There's one small exception in the gifting and concerning intangible assets situated in the U.S. But I'm not going to talk about that exception today. The last choice is you keep your green card. Well, this is not my area, but you must work with an immigration attorney to make sure you can keep the status. I mean, immigration right to be as a green card holder, right? If you're away from the United States for more than 6 months, I think you're considered as giving up your green card, and there are the system or procedure called re-entry permit, and that re-entry permit may allow you to be away from the United States while maintaining a green card status for up to 2 years and so forth. But this is not the tax area. This is an immigration law area. You must work with attorney to figure out the best way to keep the green card. Assuming you can keep the green card, you are U.S. person, worldwide income reporting, foreign information reporting requirements, the same as U.S. citizen. It's a tax obligation that you must carry, and depending on your status in the home country, you may also have to file income tax in the home country. So this is the same burden that U.S. citizen may have. If you maintain a green card, I think this is also same in the sense that if you keep your U.S. citizenship, if you don't give up your citizenship, or if you don't give up your green card, there will be no exit tax. Right? You keep filing the tax return, but there is no exit tax. So that's a benefit. The number 4 is the difference here. The difference in the sense that in the first slide I said U.S. citizen is always able to utilize lifetime exemption or unified credit for gift and estate tax purposes, but green card holders, it's not always the case. There is a concept called domicile and non-domicile. U.S. citizen is always domiciled in the United States and always being able to use the unified credit and always taxed on worldwide transfer of gifts and estate. But green card holders domiciliary, I could be wrong, right? Domiciliary, being domiciled or being non-domiciled, okay? So that's what I want to say. It really depends on the facts and circumstances, your lifestyle, your business, your family, your assets, your schools, and first and foremost, your intention. And lots of things. So you may not be considered as a domicile, even if you keep a green card in a foreign, living in foreign country. I'm not saying that you're living in the United States. If you live in the United States and you have a green card and you have a intention to live here forever, you're 100% domicile. But in this case, you go back to your home country and you keep the green card, but you're pretty much permanently living in your home country. So you may not be, as a green card holder, you may not be considered as a domicile. That means you may not utilize lifetime exemption of gift and estate tax. On the other hand, you only need to pay taxes as long as, if your estate or gift occurs on or situated in the U.S. So if this is the slight difference between U.S. citizen and green card holder who live in foreign countries. So income tax perspective, it's generally the same. However, gift and estate tax-wise, this concept of domicile, makes a difference. U.S. citizen, automatic domicile. Green card holder may not be domicile. It depends. It depends on many factors, 12 factors, 13 factors, and so forth. So these are the pros and the cons of these three choices: becoming a U.S. citizen, abandon your green card, and keep the green card. It's not a right. It's not the light. It's not simple decision for you to make. It's a heavy decision that you need to consult with at least few professionals to make up your mind, because it affects your whole life. But my intention in this video is to give a certain idea, like a starting point for you to think of. There may be exit tax, or there may be estate tax from the United States. Okay, I have an asset in the US. What's going to happen if I die in my home country? Those questions come up to your mind, and that's a good start. And you need to spend a good amount of time to prepare for your future exit from the United States. And I obviously, I understand. I'm sure you understand. I'm not recommending you to, return to your home country. It's your choice. But I'm only talking about the tax consequences, U.S. tax consequences only, not talking about, home country's tax consequences, because I don't know. You need to talk to your home country's tax expert to find out the unique impacts to your life in home country. So, having said that, thank you, and this is a disclaimer, as always, and this is our ending page of CDH Cross-Border Practice. Thank you for watching our video, and see you next time.